An AI company losing money? What? How could that be? I thought AI was in a bubble. I thought every stock was at an all-time high. Expectations are great. Investor sentiment is great. Deals are happening all over the place, from NVIDIA to AMD to OpenAI to a bunch of smaller AI cloud providers. So what's going on here? Oracle lost close to 100 million from Blackwell chips, the newest model of NVIDIA chips that's out right now. We know this isn't good because if AI spending starts going away, if Oracle can't make any money from the compute that they're renting out with their NVIDIA chips, then what is GDP growth gonna look like? Because right now, as we talked about in last video, GDP growth is now more reliant on AI spending than it is consumer spending. You know, the money that real people are using from their jobs to buy products and services that they want to buy. Real people, not just massive tech companies with seemingly infinite amounts of cash to blow on AI compute space. So why is everybody freaking out? And is it even warranted? I mean, yeah, I guess it is, because AI spending today is contributing more to GDP growth than personal consumption is. And if that's the case, and Oracle can't seem to turn a profit, losing $100 million from their Blackwell NVIDIA chip rentals, it seems like we're in quite a pickle, right? We got to talk about the reality, because I think some of these concerns are severely overhyped right now. And what does this mean for you, your job, and your investments? Well, first things first, it's not surprising exactly that the stock market sold off following this news, because Oracle, at their last earnings call, which I covered in much more detail in this video here if you're interested, but basically, in short, they went on to say they're going to make a lot of money, $381 billion in revenue from renting out specialized cloud servers to OpenAI and other AI, basically only OpenAI. The point is, Oracle said they're going to make this ridiculously large sum of money from the AI compute that they're going to be renting out to companies, namely OpenAI, and then they come out and say they just lost $100 million from renting out these chips. So yeah, it's a little problematic. It's a little worrisome, I guess, at first glance. And as we know, AI spending carries the whole economy. Literally, GDP growth is more reliant on spending from these big players in the AI space than it's reliant on your dollar, the consumer, you know, real people with jobs. And another thing sparking some worry across the space is, well, Oracle, as you can see here, debt to equity ratio is, well, pretty high compared to its peers. For those of you not exactly financial geeks, a debt to equity ratio is anywhere from 1 to 1.5, generally no more than 2, signaling a healthy financial situation. And Oracle's sitting at 5.5. So yeah, there's a lot to worry about with Oracle. They are raising a ton of debt to buy a ton of NVIDIA chips in hopes that they can rent out those NVIDIA chips, rent out the AI compute that those NVIDIA chips can provide for a ton of money. And they're putting all their eggs in this one basket. They're willing to take on a ridiculous amount of debt to do so. And so far, it's not exactly paying off. So how can we explain what's going on here? How in God's name can we explain Oracle is losing $100 million in the super hyped up AI space with infinite demand, right? That seems impossible based on basically every deal and headline we've seen over the past couple months, namely between OpenAI and just about any company that has anything to do with AI. You would think everybody would be scrambling to get their hands on AI cloud compute from Oracle. After all, they're pretty good at it. They've been renting out cloud compute for literally ever. And as we know, Oracle gets all of this compute power from NVIDIA through their newest chip, Blackwell. Well, it seems in reality, all these people that are supposedly scrambling to get their hands on cloud compute for their various AI applications, I'm sure they're all entirely useful and not complete crap. Anyways, we won't be facetious. Maybe in reality, there's only a few people scrambling to get their hands on some AI cloud compute. Maybe there are less people, less demand than we think there is. At least that's the running argument out there. That's why everybody's so scared, right? Whoa, this is a huge warning signal. Oracle isn't able to rent out their cloud compute. That's a serious problem. We're very early in the AI arms race. And if we're already seeing signs of slowing demand, then oof, maybe Oracle stock doesn't deserve to be pricing in $360 billion of revenue over the coming years. Or maybe there's another explanation and why this whole gig might be overhyped in the first place. Now, it's funny because we were kind of joking and being facetious about, 5 customers renting out compute from Oracle, but that's actually not very far from the truth. In fact, about 80% of Oracle's top 5 AI cloud customers come from just that. 5 customers: ByteDance, Meta, xAI, OpenAI, and NVIDIA. So yeah, in a literal sense, it's really not many people or entities coming to rent out this Oracle AI cloud compute. It's just a few massive players. But at the end of the day, we can really just equate these customers to OpenAI. Yeah, it's really that simple. OpenAI is directly responsible for a $317 billion contract. So this $455 billion backlog is really just 2/3 OpenAI's. OpenAI is making up about 67% of their total backlog. Is that problematic? Is that worrisome that basically all of their revenue that they're projecting, this massive sum of money that warranted the stock to have one of the biggest market cap moves of all time, sitting right around here, just below NVIDIA with, I think it was like 250 billion. Maybe not. Maybe that is a worry sign. But is there really a point to worrying about this if just about every company is relying on OpenAI in the same exact way? AMD was solo-handedly brought back into the AI arms race by OpenAI and their massive deal. I mean, literally, AMD is expecting more than $100 billion in revenue from OpenAI over the coming years. For perspective, AMD's total revenue over the trailing 12 months was about $30 billion. So this $100 billion of revenue that they see purely from OpenAI is tripling their current revenue. So yeah, you can see Oracle being solely reliant on OpenAI. This isn't a new story. We've seen this countless times. AMD's doing it. Oracle's doing it. NVIDIA, yes, a much larger company with many more customers and a very diverse customer base compared to AMD now, but investing up to $100 billion in OpenAI is certainly no joke. Now, that's why everybody's so worried, but are we missing something here? Yeah, we are. There's a simple, short couple lines in the report that everybody's so nervous about that seems to be getting overlooked. The report notes that some of this is a timing issue, a gap between getting data centers equipped for use and when customers start paying for services. Now, very simply put, OpenAI is dying to pay, begging to pay Oracle billions of dollars for this AI cloud compute, at least as far as we know. But unfortunately, to set up these data centers, to set up the environments in which you can actually take advantage of this AI cloud compute in the most optimal way possible, unfortunately, it's not a very trivial task. And so naturally, when these deals are announced, there's a lot of hype baked into the stock, baked into how the executives come onto these major news programs and talk and brag about their deals, right? The fact of the matter is, it takes time, and optimizing these environments is potentially going to take a little bit more time than people expect. So yes, Oracle is losing money right now in the short term. But let's not forget what OpenAI just said, just promised to do. That's to utilize 4.5 gigawatts of Oracle AI Cloud compute in the coming years. So just to give some perspective on that, 4.5 gigawatts is about the amount of power used to power 4 million homes. So if you think demand is running dry, then I feel as though we're missing some of the bigger picture. And again, has it happened yet? No. Is there executional risk? In other words, is there a chance that Oracle and OpenAI just can't figure out how to make this all come together and work in one cohesive environment? Yeah, of course there is. There's always executional risk with any deal, with any company, with any product or service. Of course. But the point is, the demand, at least in theory, is definitely not the problem. And that's why I think the red flags are severely overhyped right now. It's simply difficult to get everything up and running from the beginning, especially in the most optimal configuration possible. And think about it from Oracle's perspective. Again, do you even care about the short-term gains of this deal? Does this $100 million loss worry you at all when you have a $455 billion backlog? I mean, we're talking 1% of this backlog is going to be 4.5 billion, right? Them losing 100 million is less than the 10th of a 100th of their total backlog. It's tiny. The point is, it's basically irrelevant. Now, again, the worry is really, well, isn't that a worrisome sign for the future if they can't currently rent out their GPUs for good profit? Yeah, again, it's probably due to some of the factors we just discussed. The point is, a $100 million headline right now with a forecast of 450 bajillion whatever dollars in the future, I think is something to simply scoff at least right now. Again, if the trend continues, then things might change. And I agree, the sirens and alarms should probably start going off. Back to the point, think of it from Oracle's perspective. They know they have tons of money available in the future as long as they can lock down a few huge customers. Now you tell me, would you be willing to drive down these costs? Let's say cut from 476 to, I don't know, let's cut by 30%. Let's say 330. Would you be willing to take a very large short-term hit to lock down this customer right here, the AI spending beast that simply does not run out of money to spend right now? I think it's pretty simple. I don't think Oracle gives a flying hoot about having crazy high margins in their AI cloud compute rental business right now. I think their sole goal is to lock down these guys, the big players, OpenAI, companies who are literally willing to spend hundreds of billions of dollars over the coming years and provide these companies with essentially an infinite money glitch. We see it all over the place with these Bitcoin mining companies that now are turning all this equipment into purely AI cloud compute space. We see Iron, we see Nebius, we see CoreWeave. All of these companies are going all in to simply get as many of these bad boys as they possibly can, NVIDIA chips, to provide as much AI cloud compute for various use cases, some of those including training workloads, some of those including inference workloads, the actual usage of an AI model. And Oracle is simply part of that trend as well. Let's buy as many NVIDIA chips as we possibly can because demand for AI compute is virtually limitless. And that's objectively backed up by how much OpenAI is willing to throw at these companies. I mean, we're talking about a 1400% in revenue gains by 2030 with what Oracle is projecting right now. So again, is $100 million loss in the short term while the company is trying to lock down the biggest companies and get the biggest deals in the early game a worrisome sign? I would argue probably not, and this is simply just a blip in the road for now. Obviously, things could change very quickly. I think the biggest and most logical thing to worry about is what's the utilization of Oracle's cloud compute? Are they able to rent out this compute 24/7, 365 days a year? Because at the end of the day, if you want to profit off of chips that cost 60, 70, maybe 80 grand to pop in the near future with Vera Rubin coming out soon, NVIDIA's newest platform, then you better hope you can rent out those chips at all times. And right now we're seeing Oracle's utilization rate between 60 and 90% on their AI chips. We're talking about some chips basically being used half the time. That's a problem. If this becomes a long-term trend, that's showing that this AI demand definitely is not what is promised. Is that just a symptom of this timing issue? Is it just a symptom of trying to get so competitive with your GPU rental pricing that you don't give a hoot about the short-term profit to get reliable, money-filled beasts like OpenAI? Probably is just a symptom of that, but to that, we have to wait and see. I think it's important you like and subscribe so we can monitor this very closely and hopefully be some of the first to realize that there's something seriously wrong with the AI demand, with the AI bubble, with the space as a whole. So subscribe, please. And remember, as long as the AI spending circle stays intact, then all of these companies' revenues are simply going to explode. There's no and, ifs, or buts. As long as NVIDIA, who essentially has infinite money at this point, is willing to continuously throw money at OpenAI, and OpenAI then has to go back to NVIDIA to purchase their chips and eventually deploy data center compute. And as long as AMD, who's new to the game, right, is doing the same exact thing, OpenAI is getting a double whammy of an influx in cash. And as long as they're getting this cash, then they can go to Oracle. They can go to CoreWeave and say, hey, we're willing to throw you $10 bajillion per hour to get your AI cloud compute, to use your AI cloud compute to benefit us, to train our models, to cure cancer, whatever they want to do. Now, if Oracle loses these partners, if the data center story loses these customers, then these players get essentially taken out of the game, right? At the end of the day, it's more so between OpenAI and NVIDIA. Just something to keep in mind as we move forward here. At this point, I think we understand that this roundabout spending, these round trip revenues, are a systemic risk to the tech industry, with companies investing money into their customers, which their customers then use to buy from the exact company that invested money into them. Now, that's a problem when one of those companies doesn't produce any money. And that's why we really need OpenAI to make money sooner rather than later. Because at the end of the day, if AI spending goes away, then the whole economy is probably going away too. GDP growth will look something like this. So best of luck out there. Let me know what you guys think. Do you have any exposure to these companies? I know OpenAI is a tough one because they still remain private at a $500 billion valuation. But how do you see the AI growth story playing out? Is this something to genuinely worry about? Or is this simply a little blip in the road to unlock trillions of dollars in value in the years to come? Thanks for watching. I'll see you in the next one. Bye-bye now. Bye-bye.